Hey guys, welcome back to Indian Stock Traders. And in this video, I'll be sharing with you guys a swing trade and the strategy behind the swing trade that I had taken in Sona Comms. So this was the profit that I had booked while taking this trade. And in this video, I'll be telling you guys the capital I used and the price action strategy that I used to take this trade. So if you guys are new to my channel, please like and subscribe to my channel. And thank you guys for all the love and support, and comments like these really keep me going to make more and more videos for you guys. So thank you for this, and now let's get to the video. Okay guys, so in this trade I had booked a profit of around 16,500 rupees and used a capital of around 51,000. So my return on this trade was around 31%. And in this trade, I haven't used a single indicator, no RSI, no MACD, nothing. I just used price action and the sentiments of the market to make this phenomenal return of around 31% in a week, which is very good. So now I'll be sharing with you guys on how I took this trade, why I took it, and my strategy, my mindset behind this trade. So let's get to the video now. Okay guys, so now I'll be telling you about my entry in this stock. So as we can see here, the stock was clearly following a trend line. It was coming up to this point and going back. It came here once, it came here twice, it came here, it came to this range thrice. And this was when I entered into this stock at this point right here, which is around 570, around 580, 590 rupees is where I entered in this stock. So why I entered in this stock was because it was coming back to this trend zone again. And it had also made a high wick candle, it took a high wick rejection from the trend line, which indicates that the stock is going to take a bullish trend. It indicates in a bullish reversal. So it had been going down. It had been taking a slightly bearish trend from the past couple of days. And I entered on this trend line. I entered as it was coming to this trend line and taking a high wick rejection from this trend line once again. So it was once, twice, and it was once, twice, thrice. And the fourth time when it came to this trend line, I had entered in this stock again. So this was my entry in Sona Comms. So now let's talk about my mindset in holding this stock. So as I entered, the next day was a sideways day. It was a sideways day, so I didn't bother really much about it. And the next day it hit an upper circuit. The stock hit an upper circuit, and let's just zoom into it. All right, let's just go inside. Right, exactly here. So the stock had hit a upper circuit of around 10%, and then it started to consolidate in this range over here. It went all the way up here, and then it started to consolidate in this range here. So then these were the two ranges I made first. Then it broke this range and consolidated in between this range and this range, as we can see here. And right, very clearly visible. So my idea about the stock was, if it breaks above this, all right, if the next day it opens gap up, which is, this is 8th and this is 11th October. So on 11th October, if it opens gap up above this, right, you see this zone here, right, exactly right here. So if it opens above this zone, then I will continue my trade. Or if the stock hits a lower circuit, opens gap down and breaks down below this, I will I will exit my position with whatever profit I have. If it breaks down below this position right here, below this one right here, if it breaks down below this. So on that day, nothing happened. None of the two happened. It consolidated between this range again. All right. And for the next day, my strategy was the same. If it opens gap up, right? If it opens gap up, I will continue my trade. And if it opens gap down and breaks below this 630 level, right? Breaks below this 630 level, I have to exit my position. So what is to learn here is that, when you've entered in a stock, start making its ranges. Where its support range and its resistance range, as I have made here. So this was the first resistance, this was the second support, and this was the first support, and this was the second support of the stock. So you have to start making these separate ranges in the stock, as I have made here, and you have to plan what you're going to do in the future according to this ranges. So if it would have opened gap up above 662, 660, 659, 660, then I would continue my trade. And if it would open gap down the next day, I would exit my position and with whatever profit I have. And if it would open gap up, I would continue my position, right? So what happened? It consolidated for around 2 days, and the next day it opened gap up and hit an upper circuit. So it hit an upper circuit. So I exited around this 730 to around 740 range when it made this sideways trend here. So why I exited is very, very important to understand. So everywhere I went, and I saw that people were keeping target of this stock at 800. I could see that that 800 was going to be a sell zone. I go to various websites, I did my research, and everybody was keeping a target of 800 on this stock. So I knew that when the stock reaches around the 800 zone, I have to exit from this stock, because it was then going to take a bearish trend. And as we can see here, it had, as soon as it reaches the 800 mark, it takes a reversal, because everybody had kept a target of 800 on this stock. So as soon as it touched 800, it started to take a reversal. So to be on the safer side, I rode this upper circuit. And the next day I exited around at the 750 range. I exited around a 745, 730 to 740 range, and achieving more than my target, and achieving a very big target in a very short span of time. So now there is obviously a little bit of element of luck, because two upper circuits continuously, that it happens, but the probability of happening is very less. It can happen, as it has happened here. So when that happens, all right, you have to understand what the sell zone can be. As I understood here, that I know that the sentiments are against, our sentiments are that the stock is going to touch the 800 zone. So I exited my around at 730 to 740 to be on the safer side. It did go up. I could have gotten more profits, but you can never enter at an all-time low and exit at an all-time high. That is, whoever says that is just lying, or has completely, it's a complete fluke. It never happens. So you have to keep your entry point and your targets accordingly, as I have. So this was my my strategy behind, and my mindset behind this trade. I had entered at around this 560, 570 range. Okay, and as the stock took a high wick rejection from here, right? As the stock took a high wick rejection, I entered, all right, somewhere around here, and my exit was somewhere around this range right here, right? When the stock came to this 740 range. So this was my strategy in this trade, all right? High wick rejection from the trend line that it was following. Entered, all right, two upper circuits, done, exited. And I exited where I saw that there was, the sentiments, right? The sentiments of the people were that it will go till 800. So that is exactly where I had exited. Very simple, very easy, and no indicators used, just price action, support, resistance, and ranges. So this is one very important thing that you can learn from this video, that when you enter into stock, you have to start making ranges for the stock, the support and the resistance, and all of those ranges. So you can plan out your future. If it opens gap up above the resistance, very good, keep continuing. If it opens gap down below the support, sell it off. So that is how I took this trade. Very easy, very simple to understand. And yes, so guys, this was it for this video. And if you guys have any questions, please let me know down in the comment section. Thank you and have a nice day. Hope to see you guys
soon in the next video.